And that means we are live here on our YouTube channel. Maddie, we had toss up that whole time. If you want to bring that disclaimer up to you, my friend, I think. We are here. We are live. How you doing, brother?
I had the disclaimer up the whole time. Do you guys not see it?
It was showing the toss screen. I don't know if you got two monitors or something, but it was showing Thinkorswim.
Do you have the disclaimer Thinkorswim?
Thinkorswim right now, XLY on the chart.
Yeah, that's not what was up.
Say la vie.
Listen, our analysis is better than our technical skills, so deal with it.
If we do 22 shows a month, how many times do we have problems on the intro, do you think? What is our percentage?
I think we got a good
10?
14 or 15% intro problem rate.
First of all, that 14% is completely Noah. That is, I am telling you right now, the video was playing on my end.
Yeah, I don't know what's going on. It's still showing XLY here, but we can start breaking down charts.
I'm on XLY now.
Yeah.
Did you do a screen share? Or did you do a window share?
No.
I like it when young people come in and
try how to do a screen share.
I'm just saying.
I've done that before.
For those of us a generation older than you, Cody, one of the most infuriating things in the world is when young people come in and try to teach us how to use technology.
Yeah, that's fine. We're gonna get this party started the right way. Can you see it now?
I can.
There you go. Gotta get the music. Gotta get it fired up.
All right, welcome out.
Cody, please help me understand.
I was going to say, just to mess with you, I thought about saying, Matt, we're not seeing anything again.
That's a great way to trigger an old man. There we go.
C'est la vie, c'est la vie. Welcome out to our halftime report here, everybody. And Team Tackle, as you're popping in, Monday morning, always a great day. Getting excited for the week, set up for the week, watching the weekend reports, getting prepared for your trading day by day as you're going through your routines. If you're out there and you're watching our show right now, as always, hashtag Team Tackle into chat. I already see about 10 of those. Love seeing that. We are really a community at our core. And one of the principles in our community, Matt, is to have a good time and just be real people. No doubt about it. I don't mind flubs like that, by the way. They just make me happy. I don't know if that's something weird about me, but I enjoy awkward kind of moments that weren't planned. Maddie, I don't know about you.
I want to go back to the flub definition of this. That's where I want to go back to. You know, they happen. Technology. Somebody explain it. I don't know. It was not user error this time. Just putting it out there.
C'est la vie, brother. It is what it is. If you're out there and you're watching our show for the first time, by the way, welcome out. We do the show each and every day. Whenever the markets are open, we go live 12:30 Eastern Standard Time, and we break down the markets a step at a time. Make sure you click on that subscribe, click the bell, come back and join us. Let's get right into business here, guys. I mean, obviously, there's a couple of company, news items that I do want to get to later in the show. A couple of earnings reports that I do want to talk about. Upgrade, downgrades in the sectors, different performance from that perspective. But let's start big picture here on the market, Matt. And obviously the market's not having a very, very strong response here today, but it is holding its own in the face of several news items. I want to start with the Trump executive orders. I think we have to start there. Maddie, what did President Trump sign through executive order over the weekend? What were the 4 items of detail? What do we know so far?
Well, basically, as we discussed on Thursday and Friday, as we were getting closer to that deadline on Friday, that the self-imposed deadlines that the Republicans and Democrats gave them early last week between Pelosi, Mnuchin, and the individuals negotiating the extension of the federal action that took place earlier this year with the CARES Act. And those deadlines came, those deadlines passed, and there was no deal to be had. And on late Thursday night, Friday morning, we started hearing discussions out of the Republican Party and the Trump administration that if no deal was to be had, they were going to handle it through executive orders. The question was, where are they going to get the funding for those executive orders? Because executive orders are becoming more and more popular. They're nothing new to the world over the last 100 years, but they're becoming more and more popular with, under Presidents Bush, Obama, and now Trump. So it's really, executive actions are, nonpartisan. Most presidents over the last 20 years have really really done a lot through executive orders, but most of that is not regarding spending money that is constitutionally allocated. The responsibility is constitutionally allocated to the Democrats. So it was going to be interesting to see what Trump was going to do from an executive order. And basically, we have a four-pronged approach with what Trump signed the executive orders on Friday night. Number one, they're expanding the unemployment benefits, although not at the same rate at $600. They're expanding them at $400, but that $400, like most things, the devil's in the details. Obviously, the headlines report whatever the headline is. States are responsible for 25% of that. And for the states to get that 25%, they have to sign a financial agreement with the federal government or no funding, which it just typically, regardless if it's a Republican or a Democrat, typically I'm out when things get a little confusing. And that the unemployment, the extension of the unemployment benefits is a little confusing with exactly how it's going to be executed. And I think that's the concern a lot of people have right now is just, okay, that's fine, but how are we going to actually execute this in a timely manner that reaches the people that it needs to reach to? So there's a little confusion there. They're also put a further moratorium on federal evictions. Again, there's a little bit of devil in that detail as well. Payroll taxes, they're not deferring payroll taxes. There's a forbearance on payroll taxes, which means there's going to be a balloon payment down the road for those individuals who try to take advantage of deferring payroll taxes, which is a big deal, guys. You're talking 5 to 6% in taxation there. That adds up if there's a balloon payment. So there's a lot of confusion there. The only thing that I think that is not confusing in the executive actions and very clear is the student loan deferment. And that's something the federal government, because of what they did 10 years ago with basically bailing out Sallie Mae and Freddie Mac, they control the student loans. They own the student loans. The federal government does, that is, and they are deferring those student loan payments throughout the end of the year. And so those are really kind of the four-pronged approaches that we saw out of the Trump administration with the executive actions.
Marky, what was your read on the situation here as well? Obviously, I appreciate all the detail you laid out there, Matty. Some of this stuff, Mark, there's a lot of questions as to how it's going to work itself out, like Matt has been referring to here, especially on that payroll stuff ballooning at the end. Mark, is this a market solution? Is this a temporary Band-Aid? What's your read on the whole thing?
It's a temporary Band-Aid at best. Listen, I was, if it wasn't 2020, if we didn't have a liquidity-driven bubble market, the market would have been down substantially today. But it's 2020, the bubble is here. Who knows when it will pop? And so this Band-Aid solution has been basically analyzed by your Morgan Stanley's and Goldman Sachs by coming out over the weekend saying, we still expect a deal to get done. And so that probably has tempered any concern in the market, because it's not a permanent solution by any stretch of the imagination. It's not permanent stimulus. It's something, right? But most of the Wall Street talking heads are saying, yeah, well, they're still going to work out a deal. They're still going to work out a deal. Listen, the powers that be will find any excuse they can not to send this market down. I got to read this to you. So Annetta Markowski came out. She is the chief financial economist at Jefferies. And she says, listen, the fiscal cliff still represents downside risk for August, acknowledging that it's just a Band-Aid. But she says, by September, another round of fiscal support will create positive momentum, and the schools reopening, which will boost more school shopping, and all of the and all of the stars are lining up for another inflection point of activity and a second leg up of the reopening. So, hey, I mean, that is your Wall Street analyst these days. It's like everything is going to work out, and schools are going to reopen, so jack up the markets another 5%.
Oh, see,
You know?
Mark, I read a different analyst today from a different Wall Street firm, and they made the exact same argument, but their argument was by the end of August. And this is something that is, I think, driving all of us crazy. And I mean, Wall Street, just the marketplace in general, is the argument that we've seen in every single capacity in these bubble-like conditions is it's going to be good at some point, right?
Mhm.
And that's what we hear constantly. Oh, it's going to be good at some point. We expect a bill at some point. And I do agree with that regarding this specific situation. Even Mnuchin came out today and said they're willing to put more money on the table. Nancy Pelosi said she's willing to have further discussions. They're most likely going to pick up more discussions this week. And so I do believe a bill is going to be signed. But Mark, you're absolutely right. In moments in history where we've had these conversations, and this is not the first time we've had a fight in the government level regarding, stimulus or, how much money we're going to put to this. And every time in the past, the market would price that in and start sending the market down. Now, anything negative that happens in the market finds a way to spin it to the most positive side. I mean, the glass is always half full. It is always half full right now.
How does the eviction moratorium work? Because I mean, listen, if you don't pay your rent for 6, 8, 9 months, you get to January or whatever it is. Number one, are they going to just defer that? Is that a balloon thing as well, Matt? And then
highly paid political operatives cannot tell you exactly how the federal moratorium evictions is working right now. So asking us exactly how it's working.
It's funny when Kudlow was on TV yesterday, he basically couldn't answer the questions. They would ask him questions about the details of this and that and the other thing, and the administration doesn't really know either, quite frankly.
That's what I'm saying, and that's why I say the devil's in the details here, because it's a very confusing action. It is. There are not specific guidelines. There's not specific executable actions here, and so it's going to be. I was going to say fascinating, but that is not the word. It's going to be interesting to see how this plan is currently put into place, because I don't see how this could be how this could be implemented effectively.
Yeah. No, even the 300-100 split they want to do with the states. I mean, they're requiring the states to kick in $100. The state doesn't have the Federal Reserve and the Treasury to backstop and print all the money in the world. And a lot of these states, Matt, their tax revenues have been down 30, 40, 50% year over year because people aren't just out spending, So I don't know how that's going to work either. I don't think anybody knows exactly how this thing is going to actually work itself out one way or the other, which leads to the question, do you think the actual Congress, Democrats and Republicans in the Senate and the House are going to come together and strike some compromise here, Mark? Is this just kind of political maneuvering to force their hands to come up with something more extensive, more robust, that actually could meet some of the other needs?
I still say yes, but I'm just, once again, I'm a traditionalist. Deals always end up getting worked out. The caveat to that, though, is that I've never seen the animosity between two sides as I see today, and some side willing to play chicken to the highest extent possible in an election year, which is what now? I mean, what are we? Are we less than 90 days now?
Yeah.
It's the November elections are close, and so there is remains that risk, and I think we would agree that it's a lot higher than it was 2 or 3 weeks ago when we started discussing this, that one side just says, screw it. We think that this will play out in our favor in the November elections, and just say, and draw an absolute hard line in the negotiations.
I got to ask you both something very, very simply. When I saw the headlines over the weekend, by the way, I thought Monday morning the market would be down 1%. Not something crazy, but I thought it would have sold off on the news, Mark, because it obviously has questions. There's gaps in the detail here. We don't have clarity, and now you have political, kind of maneuvering here that we don't know how it's going to work itself out. Why is the market so resolute in the face of news, in my opinion, that wasn't that great?
like I was saying initially, Tim, in moments of old, the market would be down here. But what you're seeing in the market here, and Mark's on this as well, is instead of seeing selling in every sector, what you see is rotation. You see rotation go from those high flying, the companies, the stocks, the areas of the market that have been going up and up and up. You see them see profit taking, and then they immediately shift it into the distressed areas. And so I think what you're seeing today, instead of the market just sell off, you're seeing Apple sell, Amazon sell, you're seeing Facebook sell, you're seeing Netflix sell, you're seeing technology sell to a certain extent, you're seeing communication sell to a certain extent. And where's that money coming into? It's coming into discretionary, it's coming into industrials, it's coming into energy, it's coming into finance. And so even though, take for the airlines, for example, today, there is no reason in God's green earth why Delta Airlines is up 7% today. There's no reason for that. There's no reason that American Airlines is up 7% today. There is no reason for that. There was no positive news.
What about Live Nation on the backs of their stellar -97 revenue earnings up 8%,
Yeah, there's no reason for that, right? And so what you're seeing is you're just seeing this like rotation used to happen over months and months and months, and now we talk about it in days and weeks. And so instead of seeing the market completely sell, you see it rotate from those high flying pandemic plays, the big five tech plays. You see it rotate into those distressed areas, and that's what we've been talking about as the market has been slowing down. The S&P as it's reaching its all-time highs, and NASDAQ broke out of its all-time high, broke out of 11,000. You're seeing those areas of the market simply, profit take and sell in the short term, and then you see it come into the distressed areas of the market. So I think that's where, when you say you're expected to come down 1%, what that tells me is you expect a little bit of rotation is what you expect.
I thought it was going to, and we did get that here today. By the way, the NASDAQ, like you're talking about, NASDAQ is down, the Russell is up, so we're seeing that rotation, and not just across sectors, but also across different indexes that represent some of those different sectors and different plays and whatnot. This Russell breakout is clean, guys. It's been legit here for about 7 days in a row, and it's running. Small cap play here. Part of that is that, U.S. economy play. We're going to focus on companies that are actually going to benefit from stuff going on here. And there's also some disruptions.
Well, make it simple. The thing that we should always strive to do is do the opposite of the United States government and try to make things simple. And to make it simple, the Russell 2000 does not have the international risk that the S&P has.
Yeah. Yeah. And even actions over the weekend kind of exacerbate and show that risk. Mark, what do we know that happened with China relations over the weekend? There was a couple of actions on both sides that grabbed my attention. Kind of give us the detail on that if you can.
Well, I mean, and it's one of those things when China basically took over Hong Kong and eliminated any elements of democracy in Hong Kong. It was only a matter of time before there was some high-profile arrest, and that is what occurred this weekend. How do you pronounce the gentleman's name, Tim?
Jimmy Lai, I think.
Jimmy Lai.
Yeah.
And he is kind of think of a media conglomerate mogul, like a Ted Turner type, a Rupert Murdoch type. And he was arrested on basically, I don't think treason was used, but
collusion with foreign powers is what they cited.
Pretty close to it, right? Yeah. And so this was the inevitable crackdown. And one of the things that I've mentioned over the months is one of China's end games here is Hong Kong and Taiwan, right? Like they can trade tariff, trade war, this and that. I mean, at the core of their ideological belief is one nation with Taiwan, and then what they've done with Hong Kong in recent months. And so another step towards the obliteration of anything that is free in Hong Kong. And they're basically, yes, banning TikTok is not exactly going to dissuade them from continuing down this path. Another item of news that just came out a little bit is, let me get the exact headlines, came out just in the last hour or so, is that in one of the papers in China, they have basically said that in the South China Morning Post, basically said it is unlikely that Microsoft gets a deal with TikTok, which also adds a little bit of the selling pressure that you see on Microsoft today. Unlikely to get a deal with TikTok, indicating a potentially new hard line from China on a deal. So,
Well, and
and
even
TikTok is suing the Trump.
I was just going to say the same thing. I mean, TikTok is suing it. I mean, the market response here, Matt.
TikTok wants more money.
I don't blame them. I don't blame them. I mean, they're a high growth valuation type company. They should get premium.
Well, it's not just that, but if you're going to have the government force it, they're going to ask for premium.
Yeah. Yeah.
I mean, TikTok's like, hey, listen, if you guys are going to be in a bubble, pay us bubble prices, right? You know,
I would want that myself as well. You know, I'm looking at
the initial price tag for TikTok was I've seen in the low to mid 30s. Honestly, I think that's light.
I think you're coming in at 50, and I
think you're closer to 50 too.
I do as well. And by the way, Twitter is now in the conversation with TikTok, or rumors about them doing it. I don't know how financially Twitter could be able to come up with that kind of cash.
Twitter doesn't have the money. Twitter has to do something else.
Right. Right. As I'm watching
a big name here, I'm still thinking Microsoft. I know a little bit of cold water was thrown on Microsoft over the weekend, but I'm still thinking Microsoft, maybe even somebody else. But Microsoft still has to be the leader in the race right now.
Or maybe TikTok wins their legal fight. They extend it past the election, and then it ends up getting dropped at some point. I don't know.
And that might be one of the plans coming out of China, is just that we've seen that out of China for the last 3-4 months. Delay post-election. There was a news report that came out over the weekend that out of the governments out there, Russia wanted Trump, China wanted Biden. So, I mean, that's what we already knew, but
I got to read a quote from Rabobank, I believe is how you pronounce it. Kind of, they tilt on the bearish side, to say the least, but I thought it was a hilarious quote. It made me laugh this morning. It says, once again, the global architect is at risk of collapse as we see the realpolitik trump the liberal world order. And then they list all of the things going on. Huge explosions, warning of war, political polarization, dubious constitutionality, warnings of election fraud, sanctions, tariffs, and now the arrest of press barons. You know, the perfect environment for markets to keep rising.
Yeah, and that's really where my head was for Marcus.
But that is where we're at. You know, and I went over last night in the Sunday prep class, and I'm like, listen, a rational brain would get one to be very, very concerned about this and that and another. I mean, you got a million things to be concerned about. True, legitimate things, not just little bitty things, like massive things. I mean, just that quote. All of these major, gigantic things going on. But here's the thing. We're above the 9, and the chart is smarter than you. And I truly believe that. It's like you leave money on the table if you ignore technical analysis. And I'm not talking from an investing thing. Listen, there's been enough investing things to be worried about to be very, very cautious for a long time now. But from a trading point of view, the chart is the chart. The trend is the trend. Breakouts are breakouts. The small cap breakout, if you go to RTY, I mean, it was a clean breakout a couple days ago. You know, with real momentum behind it. You had short-term resistance get broke, and you've seen a monster rally over the last few days. You know, the chart patterns, technical analysis, it's why it's so beautiful. I mean, you can shut off the rest of the world, not from an investing standpoint. I got to put that caveat out there, but from a trading point of view, I mean, the chart's the chart, right? As you say, Tim, a million times, trade what you see.
Well, and what I see are uptrends, and obviously there's rotation amongst different sectors, but most of them are still very bullish. The Russell obviously picking up steam here, looking pretty good. But even that S&P on the doji today, guys, we're within 46 points of the all-time high on the S&P 500. I mean, if you think that's 1.5%, you know, a good day or two here this week, Matt, we could be hitting all-time highs on the broad market on the S&P. Russell still got some kick up to get to its all-time high, obviously a little bit further away. NASDAQ pulling back here today. I mean, trends are bullish. You know, we maintain bullishness across the broad market for a reason. And I do want to look at those sectors at some point here today, Maddie, and kind of break down the differences between what we're seeing. But the NASDAQ, even just today, you know, a little red candle right on the 9 EMA, old resistance. playing a little defense, so reading the news headlines, there's concern, there's all of that. But isn't this the same old song and dance we've been talking about for a couple months? We don't have clarity on this. We don't have clarity on that. There's rhetoric between the US and China, but the market keeps chugging along, right?
Well, I mean, you just said it though. We've been doing this for months, and I would actually make the argument we've been doing this for years. So even though it's always new to new participants in the market, anybody that's been trading over the last 3 years, they're well aware of what's going on with China.
Yeah. Let's move through the commodities, the metals, the currencies as well here, Matt, today. Let's start with crude oil if we can here. Marky, obviously, a little interesting green candle, but we're still stuck in the same range. We've been in there for a while. I did see the headline that oil was propped up by Aramco's quarterly earnings report and reaffirming their dividend. Mark, what do we know about the oil markets over the weekend? Any update on the news?
Dude, until you break above the 200 on a strength catalyst, I maintain, as I have for the last 10 days, I believe. I took a couple week off. I wanted to see something. The last 10 days, it's like, I feel confident on a bullish cash flow market, not a directional market. I don't think it's a good trading market. But, cash flow directionally to the bullish side. I kind of like it.
And Matt, you're probably still waiting for that breakout pullback, and it would take a lot more to develop for you to actually want to play this bullish. Is that correct? And Matty might be handling his dogs there. I'm not sure. I heard a bark there in the background.
Yeah, there was some dogs barking. I had to go tell them to shut it. Yeah, Tim, there's nothing I've seen out of Aramco today. There's nothing I'm seeing in the chart today that would come off my analysis over the last couple of weeks. I need to see a breakout. I need to see that breakout based on a catalyst, and I need to see a support bounce. So if you're an oil bull, you got to like what Saudi Aramco said today. Amin Nasser basically said, the CEO of Aramco said, we are seeing a partial recovery in the energy market as countries around the world take steps to ease restrictions and reboot their economies. He basically was stating that in the vein of thought that he really does see a floor on oil at $40. And I would say you're probably right. You probably do have a significant floor right there at $40. You have it from a technical perspective, a fundamental perspective. So I do think if you're a buyer, from a position or an investment perspective, you're seeing that floor at $40, and you might say you have some cheap risk. And so I completely understand that. I would like to know what their best case scenario is for price appreciation above 40. But from a technical perspective, I don't see any short-term trade unless we see the breakout on a catalyst followed by a retracement.
Yeah, I'm with you. Mark,
I will personally miss out on any breakout here.
Is it notable news at all, Mark, that the biggest oil company in the world did confirm and reaffirm their dividend and kept it? Does that mean anything to you and the way you're thinking about energy stocks, Exxon Mobil's, the Chevrons?
All it tells me is that Saudi princes own a lot of shares and they want their dividend. That's the only thing it tells me. Listen, the oil market is the oil market. It's one of the easiest markets to understand right now. It's one of the markets we have the most visibility and clarity on production, this and that. Listen, they still need oil higher, right? That's why the last cuts that they agreed to with OPEC Plus were very moderate. They need oil higher. They need to push it higher. It's a little surprising. And the only thing that has me a little concerned is the dollar falling as much as it hasn't been a real boost to oil. Normally it is. If you saw that kind of normal dollar decline, that would be a significant 10% boost to oil, just serving as just a momentum catalyst. We haven't seen that. The oil market is certainly not in a extremely healthy position, but the production cuts have been substantial. On Friday, we had another cut in rig count. I cannot believe it keeps getting cut. When we were at multi-decade lows on production levels here in the United States as far as total rigs. I'm with Matt, man. I mean, a directional, I don't like a directional play. There's no catalyst, there's no umph, there's no excitement. And the fact that the dollar falling as much as it did and oil hasn't got a boost like it normally would, you know, there's obviously some trepidation still out there in oil traders.
Yeah, and until it breaks.
I might be on an island here on the correlation status between the dollar and oil, but I've been making the argument for 5 years that oil and the dollar are not correlated, and people shouldn't be using the dollar in their analysis on oil.
You know, whether they should or not, because I've heard you make the argument, and it's a good one. But you normally see a bump, right? Because the old school thinking of dollar and oil.
But again, that old school thinking is based on the historical argument of the crude oil being priced in dollars, and this is a little frustrating for me, but oil has not been predominantly priced in dollars for 20 years. I mean, it's been really since 1999 that the international markets have been trying to move away from the petrodollar. Up until about 1999, from 1975 to 1999, oil was priced in dollars at about a 90% clip. At that point, yes, the analysis of, you know, the divergent status between the dollar and oil is strong when the majority of those cells are made in dollars. That's why gold does have a divergent status with the dollars, because the majority of gold cells around the world are still priced in dollars. And so, for example, China sells U.S. cheap Chinese goods. We give them American dollars. They take our American dollars and they go buy gold from Australia. That's why the dollar has such a dominant role in commodities, is because the majority of those commodities are priced in dollars. But over the last 20 years, you have been subtly seeing, and not so much subtly anymore, other countries doing business with OPEC in non-US dollar transactions. China has a trade deal with Saudi Arabia to buy oil in Chinese yuan. Mm-hmm. Europe has a deal with Saudi Arabia to buy it in euros. So it's just not nearly as important on the oil analysis. And again, I might be on an island here because most Wall Street still uses the dollar in their analysis on oil. I just don't think that's nearly as important any longer. And I've felt that way for about 5 years.
I'd have to look it up. I'd have to do some research on the correlation and seeing if it's split. It doesn't really impact the way I trade oil, whether dollars are up or down, but I do understand the historical perspective that the traditional financial analysts have taken.
I think most analysts are very, very slow in reacting to correlation status and those things that change, because we get so ingrained in what we do, how we analyze, that sometimes we just fail to evolve in that capacity. I do not use the dollar in my analysis on oil.
Mm-hmm. While we are here on the dollar, though, there's nothing in that chart that is grabbing my attention. Maddie, anything you want to update in terms of currency analysis here?
No, you're the argument Cody and I made in the scouting report meeting is you're starting to enter into a little bit of neutrality phase, circa what we went through in mid-June. And so you're starting to enter into that neutral phase that in this very, very consistent downtrend on the dollar. I see this as hesitation more than anything else. I still got a downward movement trajectory on the dollar.
Yeah, I'm still bearish. There's no question about it. Any rally, I think, is going to be met with some resistance and whatnot. I know the daily candles aren't real clean, but that's not how the dollar always operates. I do think that correlation, or the comparison, I should say, choose my word better, to June, that little period right there, Matt, kind of feels like what we're moving into. We'll see if these support resistance plays
it feels out. Like we're going to see a double top, double bottom, and looked at some type of breakout. You know, I talked about last week how, you know, I thought the retracement was narrow and you were looking for the breakdown. I think that $25 level, especially correlated with DXY, I think you're looking at that as a breakdown candidate here. And it's probably going to take some time. Currencies don't move aggressively. They're not like stocks. They're actually very, very conservative. So I think overall you're looking at this as neutrality. You taking off, honey? Oh. Mom's here. You guys want to say hi to Mom real quick?
I had a nice brunch with Mom yesterday. Hi, Mom.
Hey, Mom. There you go. You're on live with a bunch of tackle trading.
See, this is why you need to get video, Matt. You know,
I know. I need a video.
Like, here's the moment. Like, you know, we bash you about not having video, and here's a moment where the whole community could see our mother that we reference.
Mom, we're analyzing the United States dollar and how your currency is losing value, but it's good you own gold. See, she's just happy. She laughed. She owns gold. She's happy about it.
Mom, just say a big hello to everybody.
Yeah, love you, Mom.
Say, Mom.
Okay, we'll talk to you soon. She says love you.
Yeah, love her too. We had a very enjoyable card game yesterday, Matt. When we were kids, we played the game 500. My daughter, Sam, I taught her how to play when we were camping last week, and sat down at the kitchen table yesterday morning after brunch, and me and Mom and Sam and Mom's husband, we had a little four-man card game, and it was a lot of fun. We laughing up a storm for about an hour, so that's kind of a cool moment. Gold, silver, Bitcoin next here, Maddie. Let's keep working through. I don't see anything in the dollar there. Gold is actually kind of a light range candle here today. And
Did you guys hear what she said at the end, though? Did you
No.
hear? And when I said it's good you own gold, she goes, "I love my gold pieces."
No, I couldn't hear that.
Yeah, that's what she said. And
I
then
love my gold pieces.
I love my gold pieces. And then she waved at all of you guys like the camera was on. So she thought the camera was on.
She's awesome. No question about it. Let's analyze gold.
Gold pieces. I just love that.
Let's analyze gold if we can there, Maddie. Everybody who's watching gold who's not in wants a pullback. What kind of pullback would you need to get interested in new entries here, guys? I mean, to me, it's a fundamental position trade. It wouldn't affect any core holdings. But if you're out there and you're watching gold, you watched the rally, you missed it, Matt, you didn't participate. Do you need a technical pullback, number one? And if so, what kind of pullback would you be looking for?
Well, I think it's always important to trust your eyes and try to maximize your efficiency as an investor and as a trader. Do I think you need a technical catalyst to make a decision to buy some gold pieces? Like I'm saying pieces now, some gold pieces to make sure your currency is protected? No, you don't. But to maximize your efficiency, I think you're looking at this as a flag-based pattern as of right now, as we've seen in a lot of, and I know it's really weird to analyze gold like you're analyzing some high-flying tech stock, but that's kind of what you're doing right now. And, if this was, any high-flying tech stock out there, I would say, be patient, wait for that 9 EMA to catch up. Maybe you see a retest of the 2000 level. I don't see an entry in today. I mean, if you are the bull, you'd like to see that consolidation today. You'd like to see it playing defense right there. You see it kind of hovering on the intraday. It really shot up earlier today and then kind of retested that 2038 support level. So you do have a double bottom from a support level, but I always just feel dirty when I'm breaking down intraday analysis on gold. I just feel a little dirty, like I shouldn't be doing it. Like just keep your eye on the prize, and your eye on the prize when it comes to gold is on the weekly chart. I don't see a new entry today. Could you enter at 2000? Could you get more of a substantial retracement, say into that 1900 level, which would be, I know you're going to love this, Tim, but I'm going to do it anyways. I just gotta show you that nice little retracement, Tim.
You can draw all the fibs you ever want
I'll draw
to.
you some extensions. I'll draw you some channels. I'll draw you everything, but it's about a 50% retracement to that 1900 level, which would be on the weekly chart. So anywhere between 1900 and 2000, you're probably a buyer from a fundamental perspective. Short-term trading, if you're looking at the technicals, you want to stay at above 2000.
Mark, how are you approaching gold right now? Are you still lobbing naked puts? Still willing to own it at certain levels? I mean, what's your perspective?
I'm lobbing naked puts right now. I'm lobbing naked puts.
That is Mark's ultra bullish thesis, by the way.
By the way, that's his first T-shirt that we're going to make him.
No, and I wrote in the commodity report this past weekend, and pro members can check it out, about how to enter a trend when it goes parabolic. All right. So obviously with gold and silver over the last 3 weeks, we've seen just for gold and silver, massive moves. I definitely think parabolic is appropriate at the percentage compared to what they historically move. And so like a lot of tackle trading members are in gold, they're in silver, but not everyone, right? Not everyone. So how do you enter a trend? And because yes, you can always smash the buy button, right? But we like to be a little more sophisticated than that. And so I talked about different techniques you can use using technical analysis to help determine how to enter a trend such as this. And so pro members can check that out. I'm going to continue it this coming weekend because, like, it's not the last time gold and silver is going to have a strong move. It's not the last time a lot of stocks. Like whether it's AMD or gold or this or that, you know, you don't want to just smash the buy button. You want to find a technical signal that allows you to get in. And then one you're comfortable with, one that you've tested, one that you can use. Because technical analysis is amazing. Technical analysis is amazing.
Well, and speaking of silver, by the way, silver continues its daily
Mark-
candlestick run here. Incredible, Matt. Incredible move in silver.
Yeah, I do want to ask Mark a question, because one thing we have noticed in these parabolic runs in the market, and not specifically on gold, but the 90 MA has played such an important role in these high flying, areas of the market where you have a tremendous amount of momentum. We don't have a lot of evidence on the 90 MA ever since gold went parabolic about 3 weeks ago. Do you still think that 90 MA is kind of that zone where you're starting that buying thesis? Maybe you don't execute it, but you start thinking about it on the
Here's
night.
what my data says. If you go to SLV for me real quick, in the first initial stages of a parabolic run, the 90 MA is huge. So like we see that silver breaks out, goes up a week, and in that second week came down to the 90 MA, and then entering in. And so the technique I use in this situation in that first couple of weeks, if you come down to the 90 MA, either touch or approach it, getting in above the intraday high the next day. So because you never want to catch a falling knife, it is always worth paying a few cents or a little bit more to get in above the intraday high. So once you clear the intraday high, you're back in the trend and you're betting on momentum. Now, oftentimes those pullbacks are a lot shallower than we would normally traditionally like. But once again, we're talking about parabolic conditions. We're not talking about normal trends in these situations. So that's one thing. Now, the one thing that concerns me about gold, because from my studies, and I've been studying a lot of charts, because we've had a lot of parabolic case examples in the last 3-4 months, haven't we? Is that once you get in that 3-4 week of that huge move upward, I like traditional horizontal support and resistance levels that develop to make plays on. And so I think so early on in a parabolic move, that quick retrace to the 9, I like, and then getting in on an intraday break of resistance. Once you get 3, 4, 5 weeks in, I like those nice horizontal support and resistance levels, and playing those, using those as my entry decisions.
Well, either number one, I'm guessing Matt just disconnected, or he did not like your 90 MA analysis, Mark. One or the other.
What it probably was our mother tripping on the power cord or the internet cord.
Yeah, most likely
is what likely happened in that situation.
Let me see if I can get my screen up, boys.
Yeah, no problem. By the way, I do love those. How's the weekend prep classes going, Mark? Because I know that you started those back on Sunday nights.
They're always fun. Like, I have a good time with the pro members, both on Friday afternoon and then on Sunday night. I mean, it's good. I pick up lots of trades just from suggestions they have, and hopefully I provide a little bit of analysis. Have a pretty good batting average record when we collectively as a team talk through things. So I think that I know for me personally, they make me a better trader as they help me think through my market bias, my market position for the week ahead.
Sure. Yeah, no, I've heard a lot of great comments, and I know that pro members really, really do appreciate, especially those Sunday night crew kind of people. And by the way, if you are a pro member and don't catch it on a Sunday evening, maybe you got family dinner, something going on over the weekend, you can watch that recording on a Monday morning whenever we post it, and get ready for the week. Really, really love that webinar's come back. By the way, across the broad markets here, I think we've hit the major news headlines, a lot of the stories here. One quick peek at Bitcoin if we can. And I do want to talk a little bit about the chart on the cryptocurrency. I mean, Bitcoin has been running here, and everybody knows my stance on Bitcoin. I'm just long-term bullish. I have fundamental conviction in alternative currencies. I don't.
Have I been. I've been a long-term Bitcoin bull for 3 weeks.
Yep, sure. That's exactly right. And that long-term thesis on your side, Mark, basically is the breakout.
So basically, I turned bullish for the first time ever on Bitcoin. And once again, this is a short-term bias. It's the market we're in. right now, right? Now, I don't know if I buy that Bitcoin is an inflationary hedge or a whatever. I don't care, right? Like, I don't really have an opinion on any of it. I certainly don't have conviction, but I do know that we're in market conditions where, and what's the right word for it? The abnormal different trading instruments, gold, silver, Bitcoin, what's the space company that Lob Naked puts on? Virgin Galactic,
SPCE.
electric vehicles, DraftKings. So all of these, and I don't want to like different normal, but they're not your normal Pfizer's and McDonald's and Apples, right? These things can have really quick runs, especially when they get in breakout areas. And so the upside of real quick, short moves, and they don't always play out, especially when you issue 20 millions of new shares like Virgin Galactic did. But the conditions are there. I mean, we've seen too many examples. I mean, just look at Kodak, and we'll talk more about Kodak in a minute. But too many examples of things when they get going, man, shorts get busted, upward movement, and price goes crazy. And about 3 weeks ago, when I started being like, hey, Bitcoin, 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 it felt like it was that type of environment possibility. Now, nothing's ever a guarantee, right? Nothing's ever, but the conditions in which we are in 2020. I mean, look at Tesla's price movement. Look at Kodak's price movement. Heck, look at Hertz price movement for that week or two, right?
That tells me what you think about Tesla, by the way. When you lump in Tesla, Hertz, and Kodak into the same sentence,
all I know is you're going to look good in pink shorts. But these are the type of huge, massive move up that you can have, and it doesn't matter fundamentals, right? That's not the environment we're in. We're in a liquidity, we're in a bubble, we're in a euphoric, we're in a blow the top off trading environment. And so in the context of that, do I have any fundamental conviction in Bitcoin? No, absolutely not. But I do recognize the conditions that exist, and it's been playing out that way for Bitcoin, that can create upward movement. And so that's why I became a long-standing Bitcoin bull 3 weeks ago.
Well, it's got a nice little trend developing now, a little resistance here at 12,000. If you're watching for Bitcoin entry points, you got a potential breakout developing on that chart as I see it right now. And I think it still is very, very tradable in that perspective. Guys, let's move on to individual company news. Mark, you mentioned a couple of them I want to get to today, and we're going to start working through stock by stock that has grabbed my attention, at least on my radar, any that you got as well, Marky. And I do want to start with, actually, I'm going to hold the Kodak conversation in case Matt does get back online. He just had his power go out, called me and said he's coming back on. But let's start with Twitter. We did mention this briefly when we were talking about China and the conversation around TikTok. Twitter throws their hat in the ring here, Mark, for a potential merger with TikTok or some kind of acquisition, obviously. Twitter, a U.S. company, obviously they have a platform that's very similar to TikTok in that regard. And you got it, Cody. In that regard, Mark, it does make more sense logistically than even a Microsoft, in my personal opinion, but financially may not. Mark, you think this is a legitimate potential news here, or is this, not going to happen for Twitter? I mean, any read on this situation?
Listen, I mean, I don't know, right? I do know that that's a nice breakout level. I do know Twitter has been left behind in the party. I mean, it's up. I mean, once again, you double off the March lows and you've been left behind, but that's, 2020, right? That is a clear resistance level. Tried to peek its head above it one more time. A couple weeks ago, came down to the 20-day moving average, testing it again. So, I mean, I don't know if there's any substance to the ability of Twitter. I don't know if they have the ability to raise that kind of cash. But, man, if they were to buy TikTok, man,
That'd be a game changer for them personally, I think. I think it would be bigger news for Twitter than it is for Microsoft, obviously, just because of Microsoft's scale and size of everything else they do. But still early in that, just kind of a rumor over the weekend, thought it was interesting. I want to talk about Simon Property Group and or Amazon next. I think the more important news analysis here is SPG here, Cody and Mark, obviously commercial real estate. And Simon Property is one of the biggest mall owners in America. They've got all kinds of different, names underneath their belt. Sears and JCPenney are a couple of them that have been distressed and bankrupt recently here. Simon is actually thinking maybe we can take some of those store locations and turn them into Amazon fulfillment centers, Mark. For Amazon, there's some common sense to the deal because it would put them more regionally, kind of in the center of cities, into communities, into neighborhoods and kind of shorten their trip time in those deliveries. Doesn't make sense for SPG here. I mean, I get that Amazon's probably going to pay the bill, right? And so at least somebody will occupy a space that can pay it. But you're essentially turning your mall into something different at that point. You're maximizing and capitalizing on all the space. But does it affect the way foot traffic even goes to the mall? I mean, I don't know the answer to this. Mark, what was your read on this one?
Listen, I got zero interest in SPG. I don't care. Nothing. I just zero, nada. Like, I'm not a believer in retail, right? Unless you are Home Depot or Walmart or a dollar store. I'm sure, there's a few others in there. Listen, I've hated retail for years and years and years now. Nothing's going to get me off that. I think society is fundamentally changing. Will there always be retail stores of some kind? Yeah, I suppose, I imagine. But I think the pandemic really opened up a large segment of the population that wasn't comfortable with online shopping that are starting to form some new habits. Now, obviously, that trend was already going. So no interest in this company at all.
There's too many red flag news stories around this company over the last month. I mean, we talked about where they were thinking about turning the parking lots into, what was it, drive-in movie
I think that
theaters or
was another
something.
read, actually. I don't
It
think
might
it
have
was
been a different
SPG.
rate than SPG, but commercial real estate, though, mall ownership specifically, it's a stay away from me, 100%. I don't care what the price action does here. I know if you got a little breakout, you got clear air. Somebody else can take on that risk if they choose to. I would personally pass. That's just, my perspective on it as well. Mark, I don't see anything there, but maybe Amazon come in and get a cheap deal. It might be actually a good deal for Amazon to secure some locations to deliver on fulfillment. Stocks down today on general rotation out of tech on a Monday morning, but we'll see. Next one here, Berkshire Hathaway, if you can, Berk A or Berk B. In fact, give me the Berk A chart, Cody. The /, not the dot. Dot, I believe in like other platforms. Yep, that one right there. Berkshire, Mark, couple things. Number one, they issued their 13F filing. I have not gone through that. We will analyze that through the week when I get more detail and information about what moves they did make. But there are a couple things we do know. Number one, they bought back $5 billion, $5.1 billion of their own shares in the second quarter. That is a record for Warren Buffett and Berkshire Hathaway. So they were buying up Bank of America and they were buying up their own stock. I'm interested to dig into what other purchases they did make, Mark. Is that notable? I mean, for a company like Berkshire, for a Warren Buffett, he's going after his own stock.
Listen, buybacks are always bullish, right? And Warren is a big fan of buybacks. I mean, it's one of the reasons he loves Apple so much, is that it is like this. And Warren Buffett, I mean, understanding the fundamental basis of a company, and Warren still believes that things actually adhere to value and stuff like that. It's cute, right? And one day they will again, just not this year. But when a company buys back their stock, that means that existing shareholders own a bigger percentage of the company. And so from a fundamental standpoint, a company buys back their stock, you own shares, your percentage of the company in which you own goes up. So it's a bullish feature for existing shareholders, buybacks. Buffett thinks it is one of those ways that you can return value to shareholders, and buybacks are bullish, right? And so, it's a nice little breakout of the 200 and horizontal pivot resistance on Berkshire, joining the party.
Yeah, definitely joining the party. I think you got to like the general technical move here. And, Berkshire did not participate in much of the rally here until the last month or so, Mark. One of the better financial charts that is developing here. Not an entry point today from my perspective. You need to have some development, but we've seen this thing play out. We saw it with McDonald's recently, Cody. After the breakout of the 200, a pull back into those moving averages, those retracements end up to be very interesting. In fact, a weekend ago on the options report, we had McDonald's on there. That little breakout pullback on that 200, clicked it clean. I'd be looking for something like that on Berkshire over the next week or two as it develops. So going to be an interesting one. Barrick Gold, GOLD, if you can give me that one here next, Cody. Gold, yep. You know, obviously gold miners have performed very, very well, Mark. I know that there's been some concern about operating costs and things like that, but Barrick Gold did report their earnings over the weekend, 23 cents a share, and on revenue of $3 billion. That beat both top and bottom line expectations. The GDX next here, Cody, because gold is just one of the charts. Obviously, this affects the way we think about the entire industry. Mark, still interested in gold miners because we're already getting a little bit of a deeper pullback in the mining stocks than we are in gold itself.
I sold a naked put at the breakout level. It's funny. I was just answering an email on selling naked puts based on short-term technicals that I rarely do. But when I do them, I like to sell those above the previous breakout level, if at all possible. So I sold a naked put last week. So I'm interested. And it was a pretty high naked put for me, right? That's hardly bottom fishing.
Mm-hmm.
That is like, hey, if I get a deeper retracement in which the short-term technicals are against me, right? Absolutely. But I don't sell naked puts unless I'm willing to own it forever.
Mm-hmm.
And so if I'm trying to get into a momentum-based trade on something I believe in, not this year, not next year, but permanently, I try to find a logical place on the chart, and either a rising major moving average or the previous breakout level above that breakout level. So if it holds, I get in. And if I'm putting the stock, it's like the sweet spot is what I call it. If you bet on old resistance becoming new support, and it does, and if you're put the shares above that level, well, you got a support level below you. And if that holds, then you're getting in an ideal technical spot for price, because all that has to happen at that point is old resistance has to hold as new support and go down a little bit. The resistance, there we go. That old breakout level right there is the one I'm referring to. And so if you get put in above that level and it holds and old resistance forms as new support, then that is what I call the sweet spot. It's what I call the sweet spot because you're getting in, you got a support level potentially below you. That would also coincide with the rising 50-day moving average by the time the put expired next week. So that's how I try to approach these situations on momentum-based stocks or ETFs or commodities, where I want to get in at a discount, but I still want to use technical analysis. Otherwise, you just wait for some trading signal. And the trading signals right now on GDX are really wonky, right? That's not a clean 2 weeks of price action.
No, it's not clean, but it is still holding the 20 and kind of riding that 9 there. I like the way you've approached it with naked puts at different levels that you'd like to play it. And welcome back, Matt, as always. I'm still interested in the miners. I mean,
I gotta
still
know,
have.
did our mother trip over a power cord to knock out your internet?
Yeah, she tripped over all of her gold pieces.
I knew it. Listen, like I was like, I could see Blondie doing that.
Don't blame Blondie. I doubt it.
It was what we're just gonna assume it was a non-technological problem.
See, I love our mother, but I can see her.
Oh, goodness. Matt, we're talking gold. We're rounding up some earnings here. Next one I do want to talk about here, Cody, is Marriott. Give me the chart on MAR if you can. Obviously, not exactly a high flyer, not a real tradable kind of company, more of an investment type company that used to pay a dividend, should bring the dividend back at some point, but it's going to be hard to do it on losses like this. They report a loss of 64 cents a share. They were only expected to lose 42 cents a share, but they are really, really suffering, obviously, from the pandemic and the crisis. Matt, a company like Marriott losing a bunch of money, we know that based on the economic impact of COVID-19, the lockdowns, restricted travel. But why in the world would the stock go up on this news? I know that's a student question I've gotten over the years, and usually I tell them it doesn't matter. Maybe that's the answer I should give myself.
Well, T, we're all students in this new economic environment, right?
Yeah.
And I say that half jokingly and half serious. There's going to be situations that completely change post-pandemic that are new to cycles and systems and patterns and traditional way of going about it. And I think as the best traders and the best investors are going to be identify those early stages of those transitions. I mean, so why is Marriott up on the news that they lost 72.4% of revenue, that they missed on EPS, that they missed on revenue numbers? Other than it's a distressed area of the market and the market is focusing on distressed right now. I don't know. The numbers don't support any price appreciation here.
Mark?
Is this why it's my favorite market of all time? Because the rules are being rewritten, and
Probably.
yet technical analysis, I mean, still plays. I mean, look, that's a nice, double bottom support held on Marriott a week ago. I mean, technical analysis, the breakout on small caps. I mean, technical analysis still matters. Maybe one could argue that it matters. Maybe
I think it matters more, Mark.
has. Yeah, I know. Maybe it
I think
matters more than it ever has.
I think technical analysis is the most important study of the market today, far more than economic analysis, far more than behavioral analysis, far more than fundamental analysis. If you look at all the different types of analysis that we go through, I think at this point, the only one that makes any sense to me as of right now, 4 or 5 months into this pandemic, is technicals.
Yeah, and it's beautiful. And if you seriously, and I know Frank is the ultimate pure technician, and the term I use, pure technician, is Frank don't care if nuclear bombs are falling. He don't care if there's parties in the street. Does the chart say it? He spends zero time on fundamental, sentimental news, any of that. It's the chart is the chart is the chart. And that, not just for new traders, even for veterans that think they know more than they do, just adhering to technical analysis, man, that can go a long, long way for a trader to be successful.
Yeah, price action is king. I mean, that definitely is true, and it may be more important than it ever has been. I don't know. I'd have to think about that. It's obvious.
You think about Marriott, since we're on it. Marriott had that blow up the last time, because this is the second time the market has tried to make a big run in the beat up pandemic stocks. The last time was, what was that, a month and a half ago? But even then, it blows off the top, but it stopped at almost a penny on the 200-day moving average, to almost a penny. That's where the algos came in and said, all right, we're going to take profits. And then that created some short-term downward momentum. So, technical analysis is awesome.
The double bottom W breakout here, Matt, is that tradable? Simple question.
In a world, no, you don't trade Marriott.
I don't think so either. I still see a lot of chop and a lot of mess.
For me, you don't trade Marriott, but I don't see a reason to invest in Marriott as of right now.
It wouldn't be my first choice. The dividend's not secure.
Out of all the distressed areas of the market, I don't know. I think there's better plays here.
Yeah. One of those better plays, by the way, I did see an interesting question on Peloton here in the chat. Bring up Peloton real quick here. Nicholas, one of our Team Tackle members, asked a question about it. I looked up the chart and I'm like, it's an interesting chart. Mark, technically here, we've pulled back on 3 red candles into the rising 20 period moving average. We're sitting on the 9. Matt, there's a couple of different questions I have for you. One simple: if you were interested in an upward move in Peloton, say, the pivot to pivot momentum didn't bother you, still willing to play the trend, do you play it as a flag above the candle, or do you play it as a breakout up there at 73, whatever that number is?
Well, I mean, you can't just discount slowing momentum, right? And we're not talking a small degree. We're talking fairly substantial slowing momentum. When you're looking at pivot 1 to pivot 2, obviously wave 1 to wave 2 here, you go from $40 all the way up to 70. Then you go from, 58 all the way to 73. I mean, you're getting cut in half in that momentum. That is pretty substantial slowing momentum here. So I don't think you can just solely discount that. Can slowing momentum bullish retracement still be played? Absolutely, 100%. You're just a little bit more cautious in your strategy selection. Simply because you have slowing momentum does not mean you're not looking to make the transaction, right? It's very difficult to have increasing momentum in Peloton. Think about that, going from 40 to 70. What did you expect it to go? 60 to 130? Right? I mean, that's just not expected, and you can't expect that. So slowing momentum is something that happens quite frequently after an increasing momentum. So you got to be a little bit concerned. And my concern is you're going into an overextended trend. You're in wave 5 of a trend. You see slowing momentum in wave 5 of a trend that typically leads to some degree of neutrality, double top scenario, high base scenario, cup and handle. So anything, if you're looking to be aggressive here, yeah, I think you can be aggressive. You kissed off the 20-day, you're kissed off the old pivot at 65. You got to see confirmation. So confirmation for me would probably start right there at $70. Are you too tight against 73 at that point? If you're, swing trading a call option, yes. But if you're doing something along the bull call spread, which I would prefer here, I think you're still okay.
Two more for me
No,
here,
and
Maddie.
today is trading like an old vaccine day, right?
Yeah, I saw
Boeing,
that.
airlines, casinos up, Chewy, Peloton.
Yeah,
Zoom,
DocuSign, Uber,
down.
Shopify, they're down, Okta down. Yeah, I saw that as
So,
well.
I mean, it's trading like a vaccine day. I mean, I seriously, when I saw the price action this morning, I literally was like, all right, so what random vaccine headline was there? Because, I mean, I assumed I couldn't find one.
No,
I couldn't find one. But
No.
it's trading like a vaccine day.
Moderna had some news to come out, but it wasn't positive or vaccine. It more led to a 2021 vaccine and not by the end of the year. So I didn't see the vaccine news today as primarily bullish. I thought it's little delays.
Well, the computers are like, yeah, we're going to do our rotation playbook.
The computers just saw Moderna in the news, and
they did. They just saw Moderna in the news, and they're like, all right,
Moderna's in the
up,
news.
zoom down.
Let's go.
Let's
Turn
run
on
it.
the algos.
Yeah. Cody wants to pass the baton, Matt. Are you ready to run
I
screen?
mean, I love the market we have. I really do. But that doesn't mean it's not batshit crazy, right? Like it is what it is. So.
Speaking of crazy, one last one on earnings. Then I've left the best for last. I had to save this story for you, Matt. No question about it. Royal Caribbean RCL earnings. Let me just kind of make it simple. They were terrible. They were absolutely awful. I mean, they came out, I believe, Matt, they lost $7.83 a share. They didn't make any money, obviously. They had huge write-downs, but yet stock is up big here today. These companies that can't do business, obviously, they're going to have terrible earnings. Why in the world RCL is up almost 8-9%? I have no idea, Mark.
Why is Live Nation's up 10% today? It's insane. It's crazy. There's no reason for it. And I'll just listen. I'm to the point where I'm just like, good luck. If you want to invest in RCL, good luck.
Hey, and this is the problem. And all right, because I was thinking about this morning, because like the last time we had that big run, it lasted a couple weeks. And I'm like, is this the start of another big run in these distressed companies? And I was like, and I came to the conclusion, no. Now that doesn't mean it doesn't happen, but the last time we had this, we had technical breakouts, we had euphoria, we had these big days to start it out. But the difference is last time we had broad-based reopening where state after state for a 2-week period were fueling it with positive headlines to keep that 2-week jack euphoria going up. So states were reopening up, and they were reopening up at a brisk, rapid pace.
Yeah.
That doesn't exist today. So the conditions that led to the last run up, they don't exist today. And so,
well, Mark, and if you think schools are reopening and they're just gonna go through it with they're just gonna stay reopened, it's not gonna happen.
Yeah,
look what happened in Georgia. It's not going to happen.
I think traders really, because you're always like, oh, I'm going to miss out. Oh my gosh, I'm going to miss out. I'm like, I think you need to follow the fool me once, shame on you, fool me twice, shame on me. And because you haven't seen any fundamental change in true economic reopening. And so if you want to just jack in and buy and trade price, one, from an investing standpoint, hey man, good luck to you. right? You know, we still don't have any clarity. But from a trading standpoint, man, you are really betting on a string of positive news headlines on reopening or vaccines over the next week or two. And I think that it would be required for you to have the same kind of conditions that we had late May, June,
Well,
the last time this area got jacked up.
and help me understand this, because I'm really struggling with this one. RCL minus $6.13 a share, minus $4.71 on the expectation. They did worse than what even the worst expectations were. They came in at 175 million versus expectation at 874. They've delayed the reopenings for this industry. They were targeting August and September. That's not happening. They lost 93.7% of revenue, which is in the top 5 of terrible reports this quarter. Live Nation's number 1, and Live Nation's is skyrocketing today. I don't understand this. And again, in a market that has thousands and thousands of stocks on it, why would you bet on a company that has almost every bearish argument on it? I see better areas of the market. I'm not saying go out there and short Royal. That's not what I'm suggesting, because the euphoria is strong. I'm just saying there's a lot of better, more fundamentally with fundamental conviction out there that are doing better.
Even with more clarity on when they can get back to business. I mean, does anybody have confidence they're going to be cruising in October?
No, and that's the thing, is there was that euphoric, I mean, and because if you guys remember the mentality from a couple months ago, there was a huge segment of the population who was like, oh, the virus is done, we're going to get back to normal, it's all going to be good anytime now. That euphoria does not exist on the level it did back then in the broad-based population. So the conditions just aren't right. Hey, listen, man, I like the pullback in tech if we get signals there a lot better than I like chasing here.
Oh, I do think there's areas of the distressed areas that are really, really, really good. You look at finance for a second, taking a look at some of the sectors.
Yes, I would agree with that.
The financial sector is starting to set up from a technical perspective. You're also seeing a little bit of path here for them to get back up and running to the point. I mean, the home builders have been historically strong right now. We'll take a look at them here in just a second. But, finance, higher pivot low, kissing off the moving averages, breaking out of neutrality on Friday, continuing here today. If you're looking at distressed areas, that you could do worse than finding finance right now. Finance.
I was specifically referring to the need people to operate. You need people in your theater, need people in your casinos, need people in your airlines, requiring the physical presence of people in your mode of operation to operate. That's the specific group of stocks I was referring to.
Yeah, and that's what I'm saying. There are distressed areas in the market that do not have those types of variables in front of them, right? The number one variable that I still have is, okay, once we do ease up the government restrictions and regulations on, social distancing, stay at home, all of these phase 1, phase 2, phase 3, even when we get past that, are the consumers going to treat cruises and airlines to the same degree as they once did? Even with the economy reopening, Mark, we saw a report out of the TSA today that stated that they have 70% less foot traffic in airports around the United States. That is not a very, very compelling report to be like, well, let me go look at the airlines, even though the airlines are, doing fairly decent here today, but all of distressed is doing fairly decent. Finance here breaking out of neutrality. We actually moved it up 5 points in our ratings. We actually put a bullish rating on finance for the first time in quite some time, right there at the positive 35 handle. It's energy is not a place that I'm very confident in. But with the report that we saw with Saudi Aramco maintaining their dividend, with Saudi Aramco stating that they see a floor at $40, which is technically consistent with what we're seeing on crude oil. And remember, crude oil is not an American tradable instrument; it is a world tradable instrument. And unfortunately, the world has handled this situation, at least based on numbers and science, based on the things that we can judge based on, they've handled it a little better than we have around the world. Their economies are opening up a little quicker than we are. They've been a little safer in those economic reopenings as we are. And I'm not trying to throw, cold water at politicians. I'll let other people do that. It's really kind of more of a, we just have not embraced those certain things. Tim, we've traveled to Asia. Wearing a mask in Asia is common practice. Pandemic or non-pandemic, it's common practice. So when they come out with an order to say you've got to wear a mask, they do it, right? We have a tendency to fight those things a little bit because we're America. We have a tendency to fight those things. And by the way, I'm not saying that is
we actually
thing,
like that. Like, listen. Like, yes, it has dire consequences, but I'm pissed off at America.
I kind of like we're independent,
but I do love how stubbornly independent we are. Like,
it's not new either, guys. There was a debate over masks in the 1918 Spanish flu epidemic.
Yeah, we're very independent. It's what makes us who we are. So we can make fun of it sometimes, but it really is what makes us who we are. The independence of America, that beautiful, experiment we've been putting out there in the last 240 years. It is the most
endearing quality I think Americans have, and it drives other people crazy maybe, but and this is the apt time for the Winston Churchill quote, right? Like, Americans will eventually get it right once they've exhausted all other possibilities.
We will, and we'll do it better and bigger and more efficient. It just takes us a while to get it right.
We're the slow kid, all right?
Yeah.
But
we're methodical. We're methodical. But regarding energy, Tim, the rest when you're analyzing oil, it's an international product, not a domestic product. And so, looking at energy, you have a low point here at 34, an increase in support to 34 and 35 and a half. You have a double top right underneath that 50-day moving average at 38 by 38.30. If you can get back above that, you have clear selling to 40. If you get above 40, you're really talking 42 by 45. You can start mapping out something technically in the energy space. So in that distressed area, you might be looking at that from a technical perspective. A couple other distressed areas. I don't even know if Staples is a distressed area any longer. It's been just a juggernaut kissing on that 9 EMA. You're also breaking out of a short-term high base, as you can see it kiss off that 9 EMA there as well. Healthcare looking at a potential technical breakout here. There are areas of the market this week that are setting up fairly significantly from a technical perspective. And so for me, I'm not going to be chasing the and I'm just going to call it what it is, the complete bullshit I'm seeing in Live Nation and Royal Caribbean today and the airlines today. If they run, I'm going to miss it, and I'm perfectly fine with it, because there's a lot of areas in the market where you don't have to rely on the social media mania to really kind of drive those specific areas of the market. And you can take that and run with it however you want to. But there's better areas of the market that are setting up technically that you can make a better, more convincing fundamental argument on. Because again, Live Nation, explain to me. I don't care what it is. LYV here. Let me get it right.
There is not, other than the rotation day where beat up stocks that need people go
I get
up,
that. They lost 97.7% of revenue year over year. That's insane. And I don't care when they're going to get that revenue back. 2024? No, fine. Stay away from this. I'm going to miss it. I'm going to completely miss it.
And here, get ready to lose your mind, because I'm starting to hear the argument.
I had tea already. I'm real confident.
All right. So get ready to lose your mind, because I'm starting to hear the argument in these companies that you heard on tech 2.5 months ago. Yeah, right. But we need to look to where they will be in 2022 and 2023. And thus, we need to jack up their price. They don't use that phrase, right? But we need to trade them to where they will be in 2022 and 2023.
Okay, and so when they get to that price, are we going to be like, we need to trade them to where they're going to be in 2045?
Once again, you're using logic and rationale.
No, I get it. I just this meant that I'm going to say bubble, but I'm talking about it from a mentality perspective, not from a price perspective. because the S&P is really just 1% underneath the highs. We're not talking about a robust market year to date. We're talking about a break-even market. But the bubble in euphoria that we're seeing towards the market, this will pass.
Mhm.
It will.
And the plain and simple fact is, I'm going to throw out a prediction. One of these companies, one of these airlines, one of these casinos, one of these restaurants that are really highly traded, one of the Live Nation, one of these companies is going to declare bankruptcy in the next few years. I really believe that.
Probably. We've already seen some companies declare bankruptcy, but I think Swin has a good point, a good question, at least on live here. I want to stay on that for 1 second here, Matt, and then Kodak we can get into, but maybe it's because live doesn't have a huge operating cost or a cash bleed, Mark. I mean, you think
they also don't have any cash flow, and that leads to bankruptcy because I promise you they still have debt.
Mhm.
So I understand that their cost structure is reduced because they're not putting on any events, but that also means they have no cash flow. And when you have no cash flow coming in and don't have an arsenal in reserves like a Microsoft, an Apple, a Facebook, and those types of companies, you need cash flow. You absolutely do. So if the argument is, well, this company has no expenses and no cash flow, I would say you're staring at a bankrupt company is what you're staring at.
Yeah, because all companies are doing what they can to conserve cash, right? Usually in the form of, hey, nice having you as an employer of our company. We don't need your services anymore.
So basically the argument is at some day we're going to have a company again.
Well, I mean, here's the thing, because
I'm serious. Think about that.
It is. Matt, and this has been the argument with
someday
these companies.
We'll get back up and running.
At some point, we're going to have a company. So basically, it's pre-IPO stages, but the stock's pricing in like it has revenue.
No. Like the liquidity of a company has been the most important thing in these companies for the last 4 or 5 months. And some companies' liquidity is better than others. They're not equal. Now they're all trading today like they're all great, right? But let's take a company like Cinemark Theater. Like when I was analyzing which movie theater I would maybe want to gamble if I do, Cinemark has liquidity that extends well past where AMC's liquidity ends. And you go to casinos, MGM's liquidity extends past where Las Vegas Sands. Carnival Cruise Lines has the best out of all the cruise ships, the best liquidity, and the airlines, American Airlines, has the worst. What Matt's frustration is expressed is they're all being traded like they're all great today, right? They're all up 8%, 7%, and so I mean, those nuances of operational cash flow.
Not only that, Mark, but we're all when I mean all of us, I mean, from a price performance perspective, we're all behaving like every consumer in America is going to come out of this and act the exact same as they did before. Live Nation was overvalued before pandemic.
Yeah.
They were overvalued. They were overvalued with negative cash flow before the pandemic. And so a bad company that had negative cash flow before the pandemic now prices in like consumers are going to come in and just perform even better than they did before pandemic. That's not smart money. That is the definition of dumb money.
No, and once again, when you're analyzing this from an investing standpoint, and I've spent a lot of time on these beat up companies because, hey, premiums have been high, naked puts have been plentiful, all of that. But when you look at it from an investing point of view, and it's why Live Nation has never been on my radar, is yes, certain consumer behaviors will come back before others as far as normalcy. Things that require massive amounts of people to congregate in closed spaces, that seems to be like one of the last, right?
Yeah.
And so, yeah, but hey, listen, it's what it is.
Well, because everybody's making assumptions about what reopening is going to look like.
And we're also assuming, like, you guys know the regulatory standards of those things when we do get full back up and running. There's too many variables to even understand, let alone the consumer behaviorism. So listen, I don't want to throw shade on people making money because I want people to make money. And if you trade the momentum, just accept the fact that dumb money's pushing it up. But the reality is, I think the people that are still going to be trading 5-10 years from now, and the people that really substantially do great 10 years from now from an investing perspective, are looking at these situations right now. And the question they're asking themselves is not how much money can I make today by chasing the dragons of dreams. It's what rotations are we seeing? What fundamentally is changing in the market dynamic? And how is this going to impact price 3, 5, 7, 10 years from now? And not how is it going to impact price 3, 5, 7 minutes from now?
Mm-hmm. Mm-hmm. No, I get it. I get it. And obviously, we've seen a lot of charts in terms of coming back up on the RCLs, the lives. That is a theme here for one day. Any of the sectors that you want to take a look at, Matt, before we talk Kodak? Because we got to talk Kodak.
The last thing I'll say on systems and cycles, there are going to be substantial changes in financial systems and cycles and patterns that Wall Street investors have relied on over the last 30 to 40 years that are archaic moving into the next 10 to 20 years. And it's those individuals that have their hand on the pulse of what is happening to truly understand and looking at it, because we discount economic data right now. We discount fundamental data right now. Technicals are king, queen, and country right now. But I do believe that it's those individuals that are on the pulse of what is happening right now and positioning themselves for the next 5 to 10 years that are going to withstand this. Because a lot of these companies we talk about being the high flyers of 2020, they're the bankrupt companies nobody remembers 5 years from now.
So are we going to remember Kodak 5 years from now?
Thank you for finally allowing me to talk about
When you
insider.
got disconnected, I so badly wanted to lead with Kodak today, obviously, but I couldn't
Matt, you
without
said
you
you
here.
want everyone to make money. Does that include the individuals that might have participated in insider trading?
No, I do not want cheaters and gamblers and criminals and crooks. And I called this the second day Kodak happened. There was insider trading going on. And now the feds are investigating insider trading for the Eastman Kodak deal. And this is what happens when you chase the dreams and dragons of daily profit. Kodak goes from 60 down to $5 in a matter of, or $10 in a matter of days.
Two organizations that are investigating them. One is the U.S. Internal Development Finance Corporation, which I did not know existed personally, never done business with them, but they did put out a tweet, Matt. Recent allegations of wrongdoing raise serious concerns. We will not proceed any further unless these allegations are cleared. And they're also being investigated by the SEC over how they disclosed the loan, the information in the news, and that's the insider trading kind of investigation, Matt.
This is the day you made money on the casino. This is you getting drunk and staying at the casino. Okay.
Oh my gosh, I love that analogy. That was perfect. Hey, will you scroll back to the time period right before the day of the big gap up?
You might need an hourly chart. It's hard to see it.
One more day before that. There we go. So there was, if you do not think that there was insider trading on this, then you are naive, and some other adjectives that I'm in a good mood, so I'm not going to use. There was a massive volume spike on Kodak, like off the charts, massive, the day before it was announced. This big recap. Hey, we didn't know, the general public, what was about to be announced. And we saw a massive volume spike. Somebody knew, and someone was buying, and they were buying a lot, right?
Kind of 43 million shares.
You know, and then of course there's the other stuff that was going
not just
on.
that. Executives got options, guys.
I was just gonna say, not just that,
Yeah.
but it was, you know, and it's listen.
There will people will be in jail for this one, guys.
I think so.
And this is what, and why these things, it gets me pissed off when white collar criminals that engage in this don't get any serious jail time. You know, because this is what makes America ugly. This is one of the things that makes America ugly, because it's not ingenuity, it's not the American spirit, it's cheating, it's corruption at its core. And I hope the individuals are found out, and I hope they go to jail, and I hope they never get to serve in a publicly traded company again, because it is corrupt.
With the CEO of Eastman Kodak.
You know, because it is corrupt, It is disgusting, and it is what makes America ugly. And we need to stand up to ugliness in all its forms. If
This
we
should
are
be a
ever
nonpartisan thing. This should be a nonpartisan thing. This is greed at its worst. This is all that is.
so,
It's why
Yeah.
generations grow up hating the financial market.
So here's I got a question for both of you. So Kodak had the rip roaring rally. Who was on the other side of those transactions? Because nobody was playing them. So who sold them the shares? I
computers,
doubt it was the public.
volume.
So I'm guessing Wall Street got pinned on this, and I'm guessing some people on the street, market makers and such, are pissed about it. Like I sold those options to somebody who knew information. I mean, Mark, who else in the marketplace would have been issuing 20 strike call
Tim,
options?
here's the answer. Nobody in the market likes this behavior.
No, Wall Street, I'm sure
Nobody
hates
in
it
the
too.
market likes this behavior.
Well, I kind of like the price behavior because it's fun. I don't like the behavior behind the scenes, but these charts have been treating me well lately. So,
Yeah.
Well, Kodak, you sold your naked. Did you sell a naked photo? You did. It expired, right?
oh no, they haven't expired yet.
Oh, you better. You're talking as an owner in the future, then.
Yeah, like listen, most of my naked puts are at $2.50, right?
Listen,
Basically.
well, that's fine. I'm telling you right now, at no point will I ever at Tackle Train be like, yeah, this is what we're going to do, because this is what actually happens.
What
That's
if
right.
I found 100 patterns with an 83% correlation of
20% wipes people out due to margin and lack of understanding of position size rules. So I'm out.
Fair enough.
Fair enough. That's all I've got here today, boys. Let's start moving in
All
final.
right, I got a few other company headlines to rattle off to you. The kind of the in case we should like label this the in case you missed it segment. But the Kodak stuff, I mean, I hope some people pay. All right, a couple of things. IAC accumulated a 12% stake in MGM today. So MGM, all of the companies are getting jacked up in this area. MGM is up even more than others. IAC, 12% stake, huge. I mean, that's a massive stake in a company the size of MGM. So I mentioned the TikTok news, but there is like real pushback on TikTok, and the South Korean government is considering cutting Tesla right out of its incentive programs. So we all know one of the ways Tesla makes a lot of money is through government subsidies or credits, one way or another.
Hey, did you say one of the ways? Because I would say the only way.
I was trying to be nice, right? I bash on Tesla.
And I'm an Elon guy. I'm
Mark
back on
is
the
just-
Elon bandwagon.
Mark, you're just hunting for negative news on Tesla at this point.
No,
You
this
just go out and you look for it.
market
Like,
watch. Listen, so I would like to thank South Korea for taking us one step closer to getting Tim in pink shorts. South Korea was over there. It's like I think Tim
Listen,
really deserves.
Hey, Mark, wait until Robinhood finds out that SpaceX got a contract from the United States government to send rockets into outer space in a conjunction, in a combination with Boeing and Lockheed Martin. Just wait till they misunderstand that that's SpaceX and not Tesla. Just wait.
And then I would rattle off all the price targets, but Wall Street is in a euphoric. We're going to jack up. They're trying to get everyone is trying to get the street high price target jack. Apple got one up to 600 today. Facebook got one to 315. Like these people have stopped even. They're just like, hey, we're just going to throw up bigger numbers because it looks cool. And I'm not even being facetious when I say that. You can come up with some theoretical reason to justify almost anything, right? That's what they're doing. So basically, everything's getting jacked up because there's no limit to where this can go. So.
All right, let's throw it out to the team. Let's update the team. So Tim and Mark have a bet of Tesla, and this is a very important bet because we get a George Costanza in pink Tesla shorts if it happens. Who's going to win this bet? Mark at Tesla at $1,000 or Tim Tesla at $2,000. I would technically that 1400 level on Tesla is a fairly significant support level. You do have a lower high. You got to be a little nervous right here, Tim. You got a lower high. You're clinging on to that support level of 1400. If you break 1400 outside of moving averages and magic numbers we can draw from a Fibonacci, look at that next support level.
Now, Tim, I will let you out of your bet for $436.
I am not letting anybody out of any bet because it's not worth it for the picture.
First of all, we act like Tesla is dependent on a clean chart to rally. It's not. It can be.
Oh, yeah. They're with you speaking your book there, buddy.
Well, I'm not the one bringing up negative Tesla news every single day just to point something
I didn't think Tesla had negative news today. I actually thought Tesla had positive news with the SpaceX. But there is rotation from top to bottom.
Here's what a chartist would always do if they're just trying to speak their book and look for the rose colored glasses, Matt. Give me a weekly chart. Maybe it looks a little bit better, or give me a monthly.
Better start working out, Tim.
No, Greg, that'll be the glory of that picture. I am believing, as a matter of fact.
We're putting on a wig and we're going straight up George Costanza here. It's happening, T. You're not getting out of this one.
It is a long ways from over. Let's just say that. It is a very long ways from over. In fact, Mark's favorite moving average, the weekly 20, the monthly 9, the daily 50, 8 billion of them that he could point to if he wanted to are going to end up holding it up. But he wants to find South Korean news over regulation. That's not going to happen because he's speaking his book right now.
No, he is definitely speaking his book. Now, give the options market for what it is, but it does have Tim with a 9 delta to hit 2,000 in the next 39 days, and it has a 7 delta on the put side.
Still pricing the probability of the upside there. We'll see how that plays itself. Mark, what other open?
But Tim, you only have 400 points to the downside, and you have 600 points to the upside. The market is basically still saying, hey, buyers of Tesla, you still got to pay premium.
Yeah, the market's still bullish. That's all I've got here today, boys. Matt, any final thoughts from you, sir?
No, a boring light day in the market. I mean, you have some rotation happening, but you have some technical setups in those areas of the market we talked about. Work off your watch list, focus on the scouting reports, and show up every day in the halftime report. We're going to have some fun. We got part 2 of the Trading Justice podcast, history of currency, currency, dollars, reserve status, and we're going to be tracking 1971 till 2020 today in the podcast, updating everybody on the important trade agreements, kind of the dollar's performance over the last few decades. That 1971 date is a really, really important date because that is when we entered into phase 3 of the evolution of currency in our world history. And then next week, we're going to look at the hypothetical scenarios of what is the future of the dollar. So we were going to do just 2 parts on this one. There's just too much detail to go into just 2 parts. So I wanted to update 71 through 2000 from the historical argument of the dollar. And then next week, we're going to look at that next phase of currency post fiat madness.
Mm-hmm. And by the way, just one other note, we did talk about this a little bit with the halftime crew on Friday, but this Wednesday, we've got that big special event, Matt, that we put a lot of planning into. We've got coaches coming in to join us. We're going to be delivering, education from the halftime report all the way to our Wednesday night special. And there's going to be a really, really fun vibe to that. I'm very much looking forward to it. Coach Noah Davidson's going to be teaching on swing trading stocks, Coach Cody on swing trading options, Coach Emily on how she does trade management and Thinkorswim, Coach Tyler on delta weighting, portfolio management, Coach Greg Holmes on the basics of cover calls, and then even Breakout Frank is going to end up closing the day. And Matt, we're going to be there all day, obviously.
I am so excited for this, Tim. I am so excited for this for 2 reasons. Number one, after the halftime report, we get to sit back and just watch the coaches do what they get to do, get to hang out with the crew all day. And I just absolutely love hanging out. I mean, part of why I love the halftime report is so I can just hang out with the halftime crew. Mm-hmm. It's like, Greg's comment, you better start working out. That got an honest chuckle out of me. That was so funny. But I just love hanging out with the halftime crew and being able to hang out with the halftime crew and the coaches all day on Wednesday as we go through a little bit of an 8-hour marathon. And then we're going to finish it up with Frank scanning and how he prepares for the scouting report meeting. We're going to have a lot of fun. It's obviously going to be educational, and a lot of what we do post halftime is going to be educational in kind of the intention. So I'm looking forward to it. I think it's going to be a lot of fun. And people, obviously, we know you guys got your everyday life out there and a lot of responsibilities. So we appreciate you hanging out with us on a daily basis. And, pop in, go out, pop in, come out. We're going to be here most of the day on Wednesday, and it's going to be a lot of fun.
Mhm.
Matt, I'm a vain individual, right?
I think everybody knows you're a vain.
Everybody knows I'm a vain individual. Now, I understand this is 2020 and irrational things can happen. I've switched to Diet Pepsi and I'm up to 75 sit-ups and 80 push-ups a day, just in case Tesla goes on a run.
Tim ate a cheeseburger yesterday.
Yeah, Tim ate a cheeseburger,
Double cheeseburger, and I had a beautiful egg souffle and bacon in the morning. You bet. Yeah, Mark.
Tim, you remind me of a trailer park. I don't know if anybody watches Trailer Park Boys out there. Hilarious Canadian sitcom, a little irreverent.
If you say cheeseburger, Randy, I'm leaving.
Listen, there's a scene where J-Rock and Randy are talking, and Randy says, "I'm off the cheeseburger," and J-Rock points at Randy's gut and says, "That gut looks like you're definitely on the cheeseburger."
Listen, I think Linda makes a wonderful point. If Mark wasn't a little worried about that bet, he'd be going to McDonald's every day instead of doing those setups. I think Mark's a little worried.
Definitely makes you look like you're on the cheeseburger.
No, I switched to chicken sandwiches. I mean, come on.
All I know is like, listen, if
that
picture.
Enough. We'll wait till Tesla hits it.
Very quickly, we are doing it on YouTube. This is we hit the 10,000 mark, and so we're doing this for our YouTube channel. And so yes, it will be on YouTube.
So it's all from its halftime report till 7 p.m. show Eastern. So we got a good 8-9 hour block of YouTube on Wednesday.
7.5 hours.
7.5 hour block of YouTube.
Yep.
All right, I'm excited.
Going to be a marathon, and we're going to have a lot of fun with it. We'll obviously be talking about that as we get ready for the Wednesday, but here would be an awesome opportunity to send the link to our channel to somebody out there that might need some education, financial literacy, all those kind of things, and join Team Tackle. Guys, if you're out there, you're watching our show still, we appreciate you as always. We got to wrap this one up on a Monday because we got some stuff we got to get done. We got a podcast to record, other things that we got to get ready for that Wednesday event as well, but we will be back tomorrow.
Trey and Linda make a good point. We make a lot of bets. We need to start tracking this outside of Mark just tracking his wins.
Here's the thing. Mark, how many open bets do you and I have?
Well, it depends.
All of them.
The actual bets or the ones that I am substantially ahead on?
No, I want to know all of them. See, this is the problem.
I think we got 5 or 6.
I don't keep track, and he does, and he only reminds me of the ones he's winning.
Well, don't act like that's a negative for him. That's a negative for you.
I was going to say, I take that as a supreme compliment.
No, but here's the thing: good sportsmanship, Mark. You would also remember the bets you lose. You would also remind me of the bets you're losing.
Oh, all right.
So Mark has to be a good sportsman here and track your bets too.
The whole point of having casual bets with your friends.
And this is why you're a Democrat and why I'm a Republican.
I was going to say, you just gave Mark all the liberal fodder he needed. And I wanted to come in and be like, usually I'm the defender of Tim against Mark.
What happened to sportsmanship?
I can't defend that stance. That's your responsibility.
I do disagree, my friends. I definitely disagree.
What do you think this is? 14-year-old co-ed softball? Come on.
No, it's 40-year-old men making casual bets. You should remind me of the ones I win. I'm
Mark,
bottom line.
We should just stop talking and let Tim die on this hill.
Not
Seriously,
a chance.
Wow, pretty bad.
I have the right.
See, even Linda says, Tim, I had your back, but I can't with that. You even lost Linda, and Linda's the eternal. I'm always going to support Tim. Linda, no, you're out on this one, bro. That's a bad argument.
Mm-hmm. Well, I'm not going to make it a long argument because I do.
Tried.
I could easily go off on this on
all right, go make your fairness and your lack of responsibility argument.
It's not about fairness.
Do you
bro.
want $800 a week in unemployment benefits?
Where's my cheeseburger? All right, now I need a cheeseburger bet. We're gonna have something on that. All right, guys, we're done for today. We will be back on Wednesday for our live long special that we're doing all day long. Tomorrow we'll be back for the halftime show, same time, same station. If you've not done it yet, click subscribe, click the bell, come back and join us every day. And if you're not yet a pro member, Monday morning, great time to sign up for a 15-day trial. You can review all the weekend reports. There were so many great candidates, Matt, on those option and stock reports. A lot of triggers on the bull list here on a Monday. I got to tell you guys, good looking reports. Go and review those over at Tackle Trading and get in the game. The 15-day trial link will be in the comments below. We will see everybody tomorrow.